Immediately what I'm looking at is how we treated this as a breakaway gap. Never touched it. Immediate rebalance right there. Boom. Creates a down candle, respects that down candle, and now pushes to the upside. This is like literally bullish buy program 101. So I'm going to look to long up in the buy side, and of course, buy side is previous hour high, large hour with the gap. I'm going to look to buy up into that if it offers me a setup, or excuse me, an entry point. So this looks pretty good to me, not just because we have buy side resting above, but also because of how prominent the inefficiencies above market price are. So, and not to mention what we're delivering up off of. We swept internal sell side here. And I just kind of treat this as a model number 2, obviously, because, like I said, these are placed in at equilibrium. So you simply just anchor the level you want to, your target, basically. From the reversal point, here's midpoint, here's where these consecutive down candles were formed, right? And if we get a change of state delivery on that, I expect to run to buy side. That's model number 2. So yeah, I already told you guys what it'd take for me to enter. Like, I need a real strong push above the opening price here. Ideally, always going to make the model 2 more high probability. So we create a Ferrari gap here, right, mixed in with the opening slash high of the down candles, right? And that to me would be a very high quality long. So this is like the make it or break it moment. Like, I need to see a really strong push here, right? And I need to see a gap created. All right, so this is going to be a non-push your edge long. Okay, I like what I saw there. I'm going to put my stop loss down below, and I'm going to take a partial up here at buy side. Okay. Almost able to utilize the down candles. Notice how it tags it down there, but I didn't get the fill there. That'd be model number 2, right? With the Ferrari gap, exactly what I printed out. So note the risk to reward here. The risk is very light relative to the reward. Okay, so even though it's like a deleveraged trade, right, the reward's still amazing, right? We'd be paid very nicely. So initial target's going to be right here above previous hour high. Right now it's 11.24, and then we're going to hold runner for equilibrium Ferrari gap. So very low risk, very high reward. I like my odds here. I like the model. It performed. I was patient for it. Everything else in between is noise. Okay? We let this pan out, and here it is. So at the very minimum, previous hour high is very, very likely to be hit. So we'll be patient for this. We'll allow it. I love the relative strength being shown here on ES. It left the lower portion of the gap open, which is what you want to see in buy programs. The lower portions of Ferrari gaps being left open. Okay, Dow following the script as well. Nice. So this is like the setup that I'll take every single time. So with the volatility index being increased and other factors that I mentioned, right, I'm still going to deleverage, but like this feels like back in my groove again. This is model 3, and all the mechanics were, well, actually, okay, I said model 3, sorry, model number 2, and all the mechanics behind it are supporting it, and we have very obvious opposing draws. So even if this were to fail, this is like the type of setup, like, take my money. Take my money. Like, just like when that good movie comes out that like you have to go watch, like, take my money. So anyway, it should tag previous hour high here. We'll watch and wait. So what I'm watching here at this point is midpoint of this inversion wick here. I want to ideally see that be treated as support in a smooth environment, and then send us to the next logical pool of buy side or sell side, or excuse me, buy side, which would be right here. Okay, ES just tagged that buy side. Beautiful. Let's go. Nasdaq should follow suit here now. Like I said, I was loving that relative strength that was being shown in ES, which gave me the last bit of confidence I needed to engage with this model too. All right, so ES very strong push above there. That's exactly what I wanted to see on Nasdaq. Nasdaq almost reached buy side, not quite. It'll get up there though. There we go. Okay, so there's our partial at 48 handles, and then we're going to hold the runner for that equilibrium Ferrari gap. Stop immediately gets cut in half. Anytime you take a partial, there we go. Like this, there we go. This is what I was waiting for last week. There's that sigh of relief. That London trade that I took, right? That's what I'm looking for, right? That is exactly what I'm looking for. This is feeling like I'm back in my groove again. This is the repeating phenomenon in price. There was a down candles performed. There was a Ferrari gap, etc., etc. I don't need anything else. Okay? That's it. This is the setup that I'm taking every single time. Now, yes, it was a deleveraged trade. Do I look back and just be like, ah, damn it, it worked out. I should have used X amount of leverage. No. I told you guys real time why I deleveraged. Okay? Because I have to risk, I think it was like 40 handles. Right, and that's double what my usual typical stop loss would be. Now, on the opposing end, it offers more handles as well. I mean, this little tiny run up above here offers 48 handles. That's great. And the full runner here is 108 handles. So the volatility index can work with you in a good light as well when you're, looking at it in that context. So anyway, stop loss obviously break even. We already paid ourselves at 48 handles, and then we hold the runner up into the equilibrium Fairway gap, like I explained. And ES, look how ES just beautifully delivers up in a new week opening gap. I'm not requiring Nasdaq to deliver new week opening gap. It's actually just below it, right? This is the lowest hanging fruit target in a runner sense. So the partial there across 3 accounts, that gives me $576. Okay, so that's obviously great. I paid myself at that, and now it's a risk-free trade for 108 handles. Okay, so we'll see if this runner can hit. Honestly, I'd be pretty surprised if this runner did not hit, to be honest with you. So stop loss exactly at break even, not below or above. This is where it's being held, and I'd anticipate us utilizing this gap right here to then send us up into 950 equilibrium for rate gap. All right, so we're not really respecting these down candles, which, I mean, does that mean, oh, it's time for a reversal? Maybe. I don't know. I don't really care. I'm zero risk on this trade whatsoever. Okay, but all in all, I just need this gap to be respected and then push us home to our terminus, which would be obviously 21,639. And also 110 handles. 5-minute Fairway gap here, so this definitely can be worked in. Now, if we trade past midpoint of the 5-minute gap, then we're going to get stopped in profit here on the runner, which is fine because, like I said, I already paid myself enough. But point is, I'm watching this 5-minute gap, and I'm anticipating that to send us up into this equilibrium gap. Okay. And notice how this institutional order flow that immediately turned away from it. I want to see if that can continue and give us more strength. Okay, ES didn't even bother institutional order flow in the 5-minute, just keeping on higher. Looks like it wants to deliver new week opening gap high from what the looks of it. Oh, okay, well that's interesting. Looks like it almost stopped me out of break even. Yeah, I don't really care what it does. We'll see what it does. Got pretty close to break even there, but I'm not closing or touching anything. So, like I said, I'm going to tick. Honestly, I was pretty confident that runner was going to be hit, but it wasn't necessary to make money here, obviously. So, like I said, if it trades through midpoint at the 5-minute gap, right after a sweeping buy side, it's more likely that, of course, we'd see delivery down into the runner in profit. So it's getting pretty weak here. ES was still showing relative strength, so I don't see a problem in ES. Like, this looks like a really natural retracement to me, to be honest. But Nasdaq was the one that was, really dropping off hard in the sense that you wouldn't want to see if you're looking for higher delivery up here, right? So yeah, I wasn't able to push my edge, like in terms of higher leverage, on this trade like I'd want to. But I mean, I don't really care about that. Like, I was, I copy traded it. And the point is that it just feels good to have the models like logically and just easily flowing to us rather than sitting through 4 hours of high resistant or highs and lows being ran out consecutively. It's a breath of fresh air to see a very easy model to perform after sitting through all that. So yeah, I'm probably gonna get stopped in profit here. I don't really care. Filled in all these Fairway gaps here. I don't think it reached the breakaway gap, which is obviously where my stop is anchored at. Okay, it actually did. So my last chance here at this point is if we just completely inverse this Fairway gap right here. We'll see. And once again, like, it just shows how high the volatility index is. Like, look how small this move is. But then you're going to take a look and see that is 50, a 20, almost 30 handle run right here, right? It looks like such a baby move, but when the volatility index is pushed like it is today, obviously then you see how it moves so much more handles in a short amount of time. All right, guess I was wrong. I mean, that's why I have my stop anchor still below the breakaway gap, so it taps that to the tick and does exactly what I'd wanted to do if it trades with a breakaway gap, which is treat it like a brick wall, and now we're completely inversing this Fairway gap. So obviously not going to expect a return back to that breakaway gap, so I'll anchor my stop about 10 handles in profit, and now we can hold for this runner again. Nice. That's literally pinpoint accurate of what I want to see when we hit a breakaway gap. Beautiful delivery just like that. And then we have a change of state delivery below these 3 consecutive down candles. That to me is a high quality bullish order block. Why? Sell side delivered to the marketplace like this, and then we immediately met with buy side delivery, and we create a large fair value gap, and it breaks through a significant high like it did here. So yeah, so if this runner hits, this is going to be a $1,800 day, guys. Yeah, agreed, Kagu. The keyword is should. All right. I like the order flow here. I mean, it was a little bit extended here, but then we obviously have this really good rally. Anyway, what I'm watching here now is this 1 minute gap, of course, and then specifically the opening price of the consecutive down candles here. Okay, so this to me is the only thing that I'm watching inside of a buy program. So we already did the dirty work to the downside, right? We filled in these fair value gaps, change of state delivery plus fair value gap. Honestly, this isn't even a bad long in and of itself right here. Now, I'm not enticing you to long here, but like if I wasn't in a position already, this actually looks pretty good. Not so much on ES just because we already delivered all targets and new week opening gap, but Nasdaq just looks pretty classic right now. Order block plus fair value gap. Right, in a bullish buyer program, I want to see specifically this gap, lower portion will be remained open, and it's done that thus far. So far, so good. All right. And then I'm going to be watching this wick that was now created. I'm going to expect that just like I expect with the hourly in 15 minutes to be worked in a little bit and then offer price higher until we reach, right, that equilibrium fair value gap, which would be 108 handles. And at this point, I wouldn't touch anything, right? I'm just going to let it do its thing, let it deliver, and whatever happens, happens. So obviously, I would have preferred just to complete the move and push up to equilibrium for value gap, but right now it's just reverting back down into the rejection block here in the 1 minute chart and should yield a nice rally here to the upside now. Now, the only thing that would be cause of concern in my eyes when I'm watching price real time is a complete body through this fair value gap right here specifically. Why this fair value gap? Because this is the fair value gap that's coupled with the opening price of the breaker here. So if we body through that and close below, that's the only thing that would, concern me in terms of this runner not being hit. This is like when I'm talking about the models here and high probability delivery, this is what I'm talking about. All right, this is 101, the type of stuff that I hunt and why I'm here. Like these models that perform, the model number 2, this is the only thing that keeps me in this game on a long-term basis. So if it closes below here, I'll close it and lock in the 1K day. I wouldn't let it drop the hoy down here because at this point, like if I see a body through this, and it's probably just going to bang around and be low probable probably until the PM session, that is. All right, there we go. All right, I'm going to close that in profit. I'm locking in the 1K day. So I got 1K instead of 1,800. That's fine for me. That's more than enough for me. So 80 handles, $900 now that I'm checking on it. I thought it was going to be a 1K day, but I got a little bit below that. That's all right. Yeah, we're heading to lunch now, so that's going to be a dead zone. So yeah, close your laptop, go enjoy your day, enjoy the profits, and we'll be back tomorrow at, I don't think there's any news drivers until 10 a.m. Maybe 10 a.m. news drivers. So yeah, anyway, guys, take care, take it easy. Always a pleasure working with you, win, lose, or draw. And I'll see you guys tomorrow at 9:20 a.m.